Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at Chainlink. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Also, I want to mention the two donation links down below in the description. The links will take you to official websites where you can support Ukraine if you want to. You can donate to the Ukrainian refugees or to Ukraine's military, or both if you wish to do so. Thank you all for donating. Any help is very much appreciated. Even $5 is going to make a difference. And before we get into the video, I also want to quickly mention my Patreon. Feel free to join in. I do post every day. We have more than 450 posts, I think, already. We have low cap gem calls. We have technical analysis, video requests, project highlights. You have 5 different tiers with different benefits, so feel free to check it out. The link is in the description. Now, jumping back into the chart here. So we are on the daily right now. As you can see, this is Chainlink, and you can see that this was a nice support yellow trend line here that we have been holding throughout the bull market from when it started at the end of 2020, and ever since January this year, we lost the support and we were in a nasty downtrend. Now, if I remove this smaller fib just for a second, I have this large fib retracement here, and as you can see, this is the swing high of the fib, and this is the swing low on July 21st, and the all-time high here was at $54. Now, I set the Fibonacci retracement in such a way that we have the targets to the downside, and the targets are the two red levels here, the 1.272 and the 1.414, and our technical target is the 1.618, because more often than not, 9 out of 10 times, I would say, once you lose the first fib level, I'm going to change the brush color to white. Once you lose the first fib level here, you are in a technical target to the 1.618. In our case, the technical target was at $5.60. Now, if you can see, we did wick a little bit below that. And if you had this Fibonacci retracement set up, just like I did, and I did show you this in my previous update, you would have been filled. Now, are we going to come back to this price? I do think so, because I do think Bitcoin's pullback isn't correct, the Bitcoin correction, I should say, isn't done. I do think we're going to come back even lower. I do think we may get a fake out. Even if we get all the way up to $40,000, there is still a strong chance we're going to drop back below $27,000. In order to be bullish, we need to break resistance, and Bitcoin hasn't done that. We need to break major key resistance levels, and we haven't done that. So $5.60 is still a very good level to buy some Chainlink. Now, below that, you have the second fib level here at $3.26. I do not think we're going to be going that low unless Bitcoin gets absolutely destroyed. And as you can see, we were in this blue channel over here. As you can see, we were in this channel here. You're going up and down, and you lost this channel over here, and potentially you're coming back up to backtest this blue trend line as resistance, and you're going to get sent back down to this 1.618 target. So I'm going to bring back the small fib retracement. There we go. So this retracement is going to give us a short-term target with the 1.618 as well. I've set up the fib in the same way, but on a smaller time fractal. So we do have the high on May 16th with the swing low here May 11th. I did ignore this huge wick to the downside because we do not need to count that in. There we go. We have this low May 13th. So you have your high, you come back down to the 786, you have a retracement all the way up to this 382, and then you come back down. You are supported by this white trend line here. As you can see, you are in this falling wedge with a target at $7.96. You had a nice breakout here. Now you're coming back down for the support of the previous resistance of the falling wedge. If we bounce from here, you're good to go. However, if you start losing the first fib level here, which is at $6.47, you will be in a technical target down to $5.70. So as you can see, the 1.618 of this small retracement is very close to the 1.618 of the large retracement. As you can see, this blue level here is almost identical to the one that we have here on the 1.618. So around about, like I would say, from $5.60 to $5.70 is a great entry for Chainlink. Now, I am dollar cost averaging into Chainlink throughout this dip. You can get all of my trading alerts, all my buy and sell alerts on Patreon. So the link is going to be down below in the description. Now we have the 20 EMA, which is the yellow line here, and the 55 EMA, which is the red moving average. Now, as you can see, I always tell you in a downtrend, you're going to run into the 20 daily EMA as resistance. And that's precisely what you have done over here. You ran into the 20 and now you're coming back down for support, and you're either going to find support on the white trend line here, or you're going to come back into the pattern and break down. The brush is once again black. That is a bit annoying. And you're going to break from the pattern to the downside. That does happen quite often as well. Now, we could still see some sort of a relief rally. Like I said, we've been in a nasty downtrend, so it is only natural that we have some sort of a move to the upside, and I would target the blue trend line here, and we could potentially target the 55 EMA on the daily chart, currently sitting at $9.75. So we could do something like this, come up, the 55 EMA rejects us back down, the 20 EMA is below us, we lose that, and we continue down for the next couple of months, because I do anticipate the next 2 months will be, you could say, you know, a crab market for Bitcoin. Now, jumping into the daily RSI here, something that I want to show you is this strong resistance line that we have over here. I'm going to give you the index on that, 67.95 to be exact. That is a very strong resistance point. We have a support line below us over here that we have been holding as support since April 14th. Then we had a move to the downside below it, 2 back tests of resistance, a little fake out over here as well. And right now we're potentially going to get rejected from it once again. As you can see, we're coming up to the trend line. So this could potentially be where we get rejected. Now, if we do break above, right, I would be looking for a back test of support, and that's where I would enter to be honest, because you don't enter once you break out, you enter on the back test of support. If you're going for the long term and you're accumulating, then there is really no reason to wait. In my opinion, I'm dollar cost averaging once I get my fiat at any prices. Basically anywhere below $10 is very cheap in my opinion. And we did create, in fact, this horizontal, not horizontal, but diagonal resistance trend line. And this is good in my opinion, because once we start breaking it, that's when we'll know that we're potentially flipping bullish. So you have to keep in mind this orange resistance trend line. Once you break it, that would be a very good sign. Above that, you would have the white one as well. So we could run into that as resistance and have a retracement. So you could use these trend lines just to swing trade in and out of your positions if that's what you like to do. Now, I want to switch over to the Binance website real quick over here. Let me just switch over. There we go. So the exact same fib retracement here. I'm going to remove it right now. We do not need that. Okay. And what I do want to take a look at is on the daily. Is this the daily chart? This is the weekly chart, I should say. And on the weekly chart, as you can see, the stochastic RSI here is in the oversold. And every single time that you have been in this zone on the stock RSI, you have had a move to the upside. Sometimes a very strong move if you're in a bull market, but if you're in a, I wouldn't say that we're, officially in a bear market just yet, but Bitcoin has dropped 65% from the all-time high. So technically we are in a bear market right now. And, if this is what the bear markets are going to be looking like from now on, then, this is good for me, because I would like the prices to drop even lower so that I could accumulate more tokens. Now, like I said, the weekly RSI, the stochastic RSI to be exact, is in the oversold. So this is a great opportunity to dollar cost average. And once you're in here, even for a midterm trade, this is great, because you're going to start recovering from here in the next 2 months, perhaps. And then you could take profits along the way. And, if you have some money to spare for such a trade. Now, moving down into the weekly RSI here, As you can see, we were in a falling wedge here as well on the weekly, but right now we have lost the support trend line and we're coming back down potentially to back test this trend line as resistance over here. So potentially look for a back test of resistance. You can redraw this on your chart as well to follow it from your side. And on the weekly RSI, for confirmations, you could look for a bullish cross here where the yellow moving average crosses the red signal line. That bullish cross is your confirmation, but this is a lagging indicator, so the uptrend would have already started by the time we have a bullish cross here. So you're going to miss out on some gains, but this is a good way to know if you're going to see a strong impulsive move, because each time you do have a bullish cross, you tend to see a very, very strong move to the upside, such as over here, and where do we have a bullish cross? Over here as well. So keep this in mind. Yeah, that's pretty much it. If I missed out anything on the charts, please let me know down below in the comment section. Feel free to follow me on Twitter as well. I do post technical analysis in there, and feel free to become a member by clicking the link on your screen right now and check out my previous update on Avalanche. I'll catch you in the next one.